So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decide if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So today we're going to do a comparison between APHRIA and HEXO Corporation. Both companies are active within the cannabis industry. So we will do a solid breakdown of 3 steps. So first of all, we will do the high growth investing analysis with 6 KPIs for both companies. In the second step, we will do the quantitative analysis strategy for both companies. And last but not least, we will also calculate the fair price for both companies if available. And if not, we will do a nice scenario to give you an idea of what would happen if both companies are doing a nice development within the next fiscal years. So please stick around for the entire video because at the end I will also award one company as a winner. And also drop the like button if you enjoy this video. That helps the YouTube algorithm to support my video. And yeah, let's get started. So first of all, what's interesting, everybody's telling you, just take a look into Yahoo Finance, doing all the ratios for the known strategies and KPIs. To be honest, most of the people are getting crazy if they see all these numbers. And yeah, just relax, because I'm here. I will do the preliminary work and showing you just the overall result of the strategies. And then you have a good idea and also a good opportunity to do a direct comparison between both companies, APHRIA and HEXO in this case. So as I mentioned, I do the work as always, and I will keep you updated. So first of all, the enterprise value by sales divided by the sales 4. You can see also this measure within the valuation measures within Yahoo Finance. The cross margin is the sales divided by the direct cost divided by the sales. You can take also the gross profit divided by the revenue, around about 40%. The free cash flow margin 62, as we have a positive free cash flow margin plus the sales growth, we end up at 62. The debit ratio, this is the debit from the last quarter divided by the equity last quarter. So sorry for that, this bubble should be 1 below. So the equity and the debit ratio. And the PEG, trailing 12 months, is not available currently, as we have currently a negative EPS. Second one, or as I mentioned, the second step within this video is the quantitative analysis strategy for APHRIA, and in this case -4, or let's say -5% within the last fiscal year. So these numbers are the results of the last fiscal year. So we had a negative net income, so that is why we have a return on equity of -5%, an EBIT margin -8.5%. The equity ratio last year, the equity divided by the total assets, 72%. The PE ratio 5 years. The current share price divided by the average of the EPS within the last 5 years, so 7.73 divided by -0.03 EPS within the last 5 years, we end up at a huge value of -242. The current PE ratio, the share price divided by the current estimated EPS for 2020, or let's say for this fiscal year, because in APHRIA we were also talking about this fiscal year 2021. So nevertheless, we have here around about -110. But a very nice estimated profit growth of 214 as we compare the estimation for this fiscal year, still negative EPS of -7 cents, and for the next fiscal year 8 cents plus for the EPS. So that would be a very, very nice development. And we will do the same for HEXO. So just very quickly going through the numbers. So the enterprise value by sales 4, the cross margin minus 71%, the rule of 40 score trailing 12 months minus 136, as we have sales growth of 67% and a negative free cash flow margin as the operating income is negative, and we have a small value of revenue, and the debit ratio 0.21 as a ratio of the debit last quarter divided by the equity last quarter, and PEG trailing 12 months not available as the EPS is still negative. And the quantitative analysis result, roundabout in return on equity of minus 100, EBIT margin minus 570, equity ratio 80%, PE ratio 5 years minus 2.5, current PE ratio minus 70.4, and the profit grows 80% as we have an estimation for this fiscal year of minus 0.05 and an estimation for the next fiscal year of minus 0.01. So that was the preliminary work from my side. I will do this always and keep you updated, and now we will do the funny stuff. We can do now the direct comparison. So that's funny because both companies are getting 4 for the enterprise value divided by the sales. So in general, the enterprise value is a measure of the value of a company regardless of its financing, and if you divided this value by the sales, you can get an important ratio for the estimating the valuation of a fast growing but still loss-making technology or growth company. So in both cases we got 3 points as we are below 8. So both companies have 4 as a ratio of EV and sales. Next one is the cross margin. Here we have for HEXO minus 71, for APHRIA around about 40%. So APHRIA is doing quite better than HEXO. So the cross margin provides a good indication of the profitability of a business model. So under these circumstances, we can say that APHRIA is currently more profitable than HEXO. And the higher the percentage, the more money a company has available for other stuff like sales, marketing, research, and developing, for example, new products. So in this case, unfortunately, APHRIA are getting 0 points as well as HEXO. But as you can see, APHRIA is doing quite better. The first point would APHRIA receive after overlap the 50%. So next one is the rule of 40. So the rule of 40 is a simple key figure for assessing the efficiency of a company growth and the quality of its business model. And the higher the value, the better the, or let's say in value above 40 could be considered as attractive. So APHRIA are getting quite nice, 62%, as they are above 50. They got 3 additional points for the rule of 40, minus 136, so 0 points for HEXO. Next one, the sales growth 58% and 67%, nice performance within both companies. Both companies are getting 3 points as they are above 40. So the debit ratio, or let's say debit ratio less than 1 indicates low debit and low risk in terms of finance, while a debit ratio greater than 2 indicates possible risk from debit, and in addition to that, or risk within the financial situation of the company. Both companies are doing nice, 0.2 for both companies. So as they are below 0.5, both companies are getting additional 3 points for the debit ratio. Last but not least, not available for the PEG, unfortunately, because from my point of view, the PEG is one of the most important key figure for the assessment of an already profitable growth stock. And if this ratio is between 0 and 1, as Peter Lunch already mentioned, we talk about an undervaluation of a stock. But this could be just calculated for companies that are already sustainably profitable. Let's doing the quantitative analysis. For both companies, one's minus point as they are below 10% of the return on equity. Minus 5, minus 100. Here you can see that was from the last year. You can see that APHRIA has quite a better financial situation than HEXO, and the return on equity indicates how the equity of a company has earned interest during a financial period, and the shareholder can see from the return on equity how profitable his investment in the company is. So both investments would be negative, but nevertheless, as you can see here, HEXO is doing worse than APHRIA. But for both companies, 1 minus point. As well as for the debit margin, both companies are doing bad. HEXO around about 600% minus EBIT margin, and minus around about 10% EBIT margin for APHRIA. Both companies are getting one additional minus point as they are below 6. The equity ratio last year, so in this case both companies are doing quite well, 73 and 80%. Both companies are above 25, so both companies are getting the first point for the equity ratio, and it's a nice information about the credit rating of the company. So the PE ratio, 5 years, 242 for APHRIA and HEXO 2.5. So what indicates the ratio? It indicates after how many years you have double your stake, so assessing that the profit remains constant, and it's therefore a good indicator of whether a share is expensive or cheap. Due to the fact that both companies have currently a negative EPS, both values are negative, but as you can see, we talk about around about 240. That could indicate that the current price of APHRIA is too high, as the current price of HEXO is quite low and cheap. Next one, the current PE ratio, minus 110 and 17. Both companies are getting one additional minus point as they are below 0. And last but not least, the profit growth, huge profit growth, or an estimation of profit growth within the next 1.5 year for APHRIA, or let's say for the estimation for the next fiscal year, compared to this estimation for this fiscal year, around about 214% and 80% for HEXO. Both companies are getting one additional point as they are above 5. Overall, quite the same achievement for both companies, minus 2 points, as they have 2 plus points and 4 minus points, so as a sum, minus 2 for both companies. And here again, the overall result of the high growth investing score, 12 points out of 18, quite nice for APHRIA, and 9 points out of 18 for HEXO. Minus 2 points for both companies within the quantitative analysis from the last fiscal year results. And last but not least, the fair value. What is the fair value? So we use the Peter Lynch calculation, the EPS multiplied by the estimated profit growth. So if we take a look into the EPS of 2018, then we have 0.14 as an EPS, and we have an estimation for the next fiscal year of 8 cents. Then we would have a negative profit growth within the last 4 years. And that is why we have here negative value, so not available currently. The same for HEXO. If we take a look into 2018, minus 0.13, compare this to the EPS 2022, then we have minus 0.01. Quite a nice development and average of profit growth of 23% roundabout within the last 4 years, but nevertheless a negative EPS. So that is why we had also an not available. Current price 0.87. But what I did, also a scenario, if we would assume that, let's say, HEXO will do an overall result of 8 cents within the next fiscal year 2022 instead of minus 0.01. So that could be, let's say, a scenario due to the fact that they are a high growth stock. That would mean compared to 2019 EPS of minus 0.25. Then we would talk about a profit growth of 44% on average, and multiply this by 8 cents, then we would end up at 3.52. So a potential gap of plus 300% compared to the current price. And here as well for APHRIA, we also use the EPS of 2019 and not 2018. Due to the fact that we had EPS of 0.14. If we just compare this figure to the estimation for the next fiscal year, we have more or less always in profit growth, an average profit growth of around about 0. So that is why I use in this case 2019 and that is why this is the baseline, minus 0.05 compared to 16 cents instead of 8 cents. Also just as a scenario, so HEXO is doing quite better than estimated, as well as APHRIA is doing better than estimated. And if we compare this 0.16 with a 0.05 from 2019, so within 3 years we would have an average of 140% profit growth, and that would mean that we would end up, if we multiply this at 22 US dollars, so that would be a plus of around about 190%. As the current price is at 7.73. So this could be a scenario if both companies are doing quite better than estimated. At the end, I would stick still for HEXO. So congratulations, HEXO. They have, from my point of view, a bigger potential in terms of the price growth. So if both companies are doing or presenting nice results, and if they beat the estimation, from my point of view, the price development for HEXO will be huge and bigger than for APHRIA, as they already achieved a nice price level of 7.7 US dollar. Nevertheless, in terms of the financial situation, APHRIA is doing better than HEXO. HEXO is still not profitable, and they have still weaknesses within the profitability of the company, and APHRIA is doing better under these circumstances. So yeah, in general, I hope you like this video. Please drop the like button for the YouTube algorithm. That would help me. Also hit the subscribe button to become part of the Market Stock Club family. That would helps me to increase the community. I will keep you updated. I will do the preliminary work, the hard work. I will just show you the overall results of my analysis. Also doing the stock comparison. I think that's a very nice format to give you a direct comparison between both companies. And yes, I wish you a nice day. Take care, and hopefully we will see each other again. Bye bye.